All right. Hi, everyone. My name is Angela Huang, and I'm the founder and principal consultant here at Revan Consulting. So, we specialize in providing value add marketing and sales services to private equity and real estate funds looking to raise money directly from accredited investors. So, combined, we have close to 30 years of experience in sales and marketing together, and we've raised more than $150 million. And now, let me pass it over to my co founder, Nico Lam, for a quick introduction.
Thank you, Angela. Hi, everybody. My name is Nicholas Lam. I am Angela's co-founder and principal consultant here at RevGen. We are focusing on sales and marketing, like she said, for private equity firms trying to raise funds from retail investors with an emphasis on accredited investors. For those who don't know, accredited means it's an SEC term. Basically, that means that person has a net worth of over $1 million, not including their primary residence, or an income of $200,000 in each of the last 2 years, $300,000 if they file jointly. With that being said, these are what are considered high net worth individuals, and this is what we are focusing on currently. We are helping firms, funds, etc., raise money from these folks, cutting out the middlemen and retaining more control in the fundraising process.
Fantastic. Thank you. Actually, I'm really glad that you defined what, actually defines an accredited investors, because we do get that question quite a bit. I think that currently there's over 24 million accredited investors, people that are classified as such, and that number is actually expected to grow each year, which is a pretty significant. So I think there's a huge market for a lot of these fund managers to raise money directly from investors, as well as, of course, go through, their institutional investors, private family office, and, broker dealer channel. But for this particular discussion, we're going to be focusing on, do's and don'ts, and basically what it takes to raise money directly from the investors. So with that, let's kick off the discussion by talking about the funnel, the sales funnel. We realize that that is a pretty well-known topic, I would say, or a concept in some of the tech industries or other industries. But I think what we found in this particular industry is that they get a little lost in translation, but it's extremely important for you to build a sales funnel. So let's kind of talk about what that means. Nico and I, we really believe that having a really solid synergy between marketing and sales, that's important for you to be able to raise money successfully. Because marketing efforts should bring you qualified leads, not just leads, but quality leads that your sales team can work with, and turn those prospects into potential investors and help you raise money. So is there anything that you want to add to that, Nico?
Yeah, no, I think you've covered quite a bit. I think that focusing on the top of the funnel is very important. Most people think that you just have to spend as much money as possible, but there are better ways than just paying, the digital ad companies, millions and millions of dollars. So I think that's a really great place to start. It is a logical place to start, considering that is, how you're getting these leads.
So let's talk about that. So that's a really great point. That's actually one of like the don'ts that I always want to emphasize. So like marketing can go either way, right? You can either spend a fortune, millions and millions of dollars without actually having much success, or you can be strategic. I really firmly believe that you don't have to spend a lot of money to be successful if you have the right plan in place. So let's talk about lead gen. So there's multiple ways that you can generate leads. And, when we talk about investments, we talk about diversification. And I think that that diversification is very important when it comes to marketing as well. So the worst thing you can do is just pour all your money in one channel. So let that be, Google ads, or, affiliate program, or, just PR. Like the worst thing you can do is just, you know what, this has been successful. I'm only going to focus on this because it's only going to cost you more because your competitors are doing the same. So when I say diversify, it's great to do that, but let's just be mindful of all right, your budget and, is that the only thing that you should be doing? And the answer is no. Let's look at Google Ads. Does it actually make sense? Or, is your target audience, are the investors actually searching for you? So that's another place to start. And what are the keywords that, they may be searching for? So you have to do some analysis on that. And, it's also important for you to build your brand. And I think a lot of fund managers tend not to really see the importance of building your brand, but I think that's really important because, you're one of hundreds of out there. So what makes you different? What's your track record? And, what makes you different and what makes your projects different than others? And unfortunately, I would say that every single, sponsor, the fund manager thinks they have the best product.
Of
And look
course.
at it.
Yeah.
Every single, right? Every
Of
single
course.
fund
Yeah.
manager. So, investors probably hear that all the time. Oh, we give you the best returns. This is the best project. This is the best location. They hear it.
Yeah.
And you
Yeah.
talk to investors. Like, wouldn't you say that they, tell you like, oh yeah, don't wait for that. That's nothing different.
Exactly. Just like in marketing, you want to stay away from buzzwords. In sales, you want to stay away from superlatives. So when something is the best or the highest or the lowest or something along those lines, it's generally a red flag. Not always. Sometimes it's just a matter of fact, but when you hear those as an investor or when you hear yourself or see others on your team using those types of words or phrases when interacting with investors, that should set off an alarm to one, just stop that overall, but also change the way that you speak to folks because there are a number of real estate investments. There are a number of products that people can buy. There's, you go to any store and there's a million of one specific thing. To say one is the best or better than the other is very difficult. And so when it comes to real estate, it's all about finding folks who are actually suited for what you're looking for as far as the investment itself. If it's something like a REIT, if it's something like an opportunity zone fund, if it's something just more like a traditional development fund, it really doesn't matter. But the biggest thing is you want to find the right customers, which kind of ties back to bringing them in through good ads, strategic efforts, right? And so that way when you actually talk to these folks, you know what you're doing, and you feel like you're empowering and basically you're educating, right, to earn the right to sell, instead of this is the best, this is the greatest, because when you do that, you sound like everyone else. So it's very important to differentiate yourself when you are speaking to these investors, when your team is speaking to these investors, so that they don't feel like you're trying to be disingenuous, right?
Oh,
Because no parent wants to hear that their child is ugly, and
yeah.
there are a lot of really good uh, real estate investments out there. So what makes yours special? Is it the experience of the developers, of the partners? Is it the land itself? Is it the type of product that you're building? Is it what you're buying and refurbishing? It really depends, right? But it's all about framing it where what's in it for the investor, and that's the most important thing. But it does start with getting the right investor, or at least attracting them to your online presence, so that you can have more quality at bats with these folks.
And that's really important because I think you have to identify the type of investor that would benefit from your product. I think oftentimes people just want to cast a wide net, right? They're just like, oh, we just want investors. It's like, well, what kind of investors? Do you offer any tax benefits, for investors? And if that's the case, let's take a look at that. Maybe it's the people that are selling their stock or business or real estate. And if you don't offer tax, like what's in it for them? What are the benefits that you
Exactly.
offer? It could be the quarterly dividends, for example, or maybe, some investors want to invest locally. So do you want to do more like local campaigns and things like that? So I think to say, oh, we want all kinds of investors, that's the worst place to start. You have to be very targeted. And when you are targeted, then you take a look at, you can segment your persona, so to speak. Like maybe you're an investor, you want someone that, is a relatively new investor that are looking to get into private equity investing. And there's a lot of education that you have to do versus maybe more seasoned investor that are just like, oh, okay, I have extra $100,000. That person's experience and expectations will be very different than first time investors. So when it comes to marketing, I think that you have to create materials that really speak to the different types of investors that you want and really talk about the benefits that your property, or your fund will offer them. So I think that's really important. And there's so many different ways of raising money. When it comes to marketing, so we talked about ads. I think that's kind of the easy way. I think people think, oh, if we just spend a ton of money, we'll do that. You may be able to generate a ton of leads, but that doesn't mean that they're the right type of people. You could,
Exactly.
for me,
Exactly.
yeah, right? Like for me, I would rather that we help you get 100 really good quality leads versus 1,000. That's not even gonna be the right people. You just wasted a bunch of money. So I think quality is more important than quantity. And that's where, having your brand positioning, having the right content strategy, and, working to build some relationships with key reporters in your area, all of that comes in really handy. And then you can also tap into, the CPA network, the realtor network. It really depends on the types of products. And that's where, getting the right consultants in place, they can help you do that. Because if you get approached by marketing people and they said, you know what, you need to invest this amount of money and you need to just run ads, I would say run away, because that is the worst place to start, because you don't have a strategy, you don't have a plan, you haven't really identified what markets you want to focus on, what type of investors, and haven't really taken a dive into what their pain points are and so forth. So if you want a strong top of the funnel, meaning to start generating quality leads, like you really have to do a deep dive before you spend a ton of money. So that's what I would just kind of say. So I guess in sum, you don't have to spend a lot of money to get quality leads. Focus on quality over quantity. So I guess this is a good place to kind of talk about what happens. Let's say that, you have successfully, started to generate some leads from different sources, your ads, your investor groups or CPAs or so forth. Now you start getting some really good quality leads. And then what happens? So that's kind of like where, the marketing and sales synergy becomes extremely important.
Yeah, I think so too. So going back to the point that you made about getting quality, it's so you're starting to generate leads either through your personal network, through LinkedIn, through one of your investors are making referrals. Okay, so take a look at them, look for commonalities, look for differences, and figure out what you want to increase, right? So do you want business owners? Do you want just wealthy individuals who have high-paying jobs but not a lot of assets? Do you want real estate folks who have tons and tons of real estate or experience? You have to figure out what's your type of investor that you want, and so you need to define your ideal customer profile, or ICP, which is a very common and old concept in sales. Because once you figure out who that is, you can go after them. And to Angela's point, you can be very targeted. So once you're at that point, you can figure out, okay, well, we're getting lots of leads from X. We really like those. So let's double down there. That may work for a little bit, but you want to always constantly be tweaking, always optimizing, making sure that there's a feedback loop between your investor relations or salespeople and marketing, saying, hey, these are where the leads are coming from, and always making sure, and this is something that we'll cover later, is how did you hear about us, right? How did you hear about us is one of the most important questions that you, as a fund, as a firm, as a company, need to ask, because that is a key piece of the puzzle. When you know where people are hearing about you, you can amplify it, right? So for some folks, it's going to be LinkedIn. For some folks, it might be Reddit. For some folks, it might be Facebook. It doesn't really matter. Some of it might be Google, but it's generally on the internet. It's not likely to be on the television or through more legacy forms of media, but that's not to say that those aren't valid,
That's
because they can help build your brand. As much as we all kind of laugh at billboards and the idea of them, they still work. People in the United States, they drive, right? Even if they're not driving to work anymore because they're working remotely, they're still driving. They're still seeing billboards. So if somebody comes in and they say, "Hey, we saw your billboard," and they end up buying or investing, that is valid, and that's something that you should know about. Um, Albeit that won't be your main source of leads, but it is something to know when you are doing, budgets at the beginning of the year and say, "Oh, okay, well, we got this many leads, we've raised this much money last year." 1% of our leads came from legacy media. I mean, is there something more that we can do there? Is it cheap? And that's all that you want to look into. But it does start with identifying your ideal customer profile. Is it, John and Susan Jones, who they have a little bit of money. They're looking to get into more alternative investments, etc. It could be them. It could be a big family office who
right.
is looking to get into more development, etc. Instead of things like uh, REITs or whatever they're invested in. It's all about diversifying, and that's a message that's going to resonate with a lot of folks, depending on what you're selling them as far as a real estate investment or product. But that's it. Is you need to figure out what messaging works for which, and knowing where they're getting their information will give you a big piece of the puzzle. Knowing how they gather information and learn things. So
Absolutely. And that's really important because I think that helps marketing focus their plan and resources and well, time, resources, and budget. And, I agree with you that depending on the investor, the way that they find out about you is completely different. Their journey, their path is going to be so different. And there's really no one size fits all. And I think that oftentimes new and emerging fund managers often, they will say, "Oh, we were able to raise X amount of money through family and friends and their network," and that's a fantastic way to start. I think that's great.
yeah,
It gives you the
absolutely,
seed money, but once you start raising, 30, 50, 100 million, your personal network will be, it's going to be tapped out by then. So that's where,
exactly,
having the right marketing and sales, processes and strategy in place, that's really going to help you. And I think direct marketing, one thing that I want to clarify is that direct marketing to the investors is going to be very different than marketing to financial advisors. That a lot of high net worth individuals use financial advisors. But what we find in our research and experience is that up and coming investors, the future generation of investors, I would say the millennials and potentially Gen Z in the next decade, they want to take ownership of their finances more so than anything else. And if your funds, minimum investment is 50, 100 or $200,000, these generations can afford to do that and they want to diversify. But they're certainly not going to just listen to advisors. They're going to be doing their own research. So you need to make
exactly.
sure that your brand is omnipresent, like it's everywhere. It can be Reddit threads. There's so many forums on Reddit that talk about investments, right? And there's short videos on YouTube and things like that, and influencer marketing. TikTok, I mean, it's huge for personal finance. That's the number one topic on TikTok. So I think your approach has to be different. They're just not going to rely on one person to tell them how to spend their money. So that's,
Yeah,
what to focus on. But yeah, I think, just know that talking to the investors will be very different and it's going to require different, content. So the type of content that you're going to be building is going to be very different than just marketing to the advisors. It's going to be very, very different. And I think that's something that a lot of fund managers may not understand, or maybe they just don't know how to get started. And that's where, we can add a lot of value. But I think that kind of wraps up our discussion on top of the funnel. So then we can move on to talking about what's next, the middle of the funnel. Now that marketing has brought in some leads and you're happy with, the type of leads that you have, and then what happens? So we'll talk about the next.